Cloud. Perfect. Well, hello everybody. Thank you for joining us. I hope you're all having a swell morning or early afternoon, I should say. Thank you again for joining me for another webinar series hosted by Futurely. This is absolutely supposed to be an educational webinar, 100%. You know, we really want to share learnings and insights that we've gathered across the ecosystem in different capacities, and anybody who has been, I guess, following the activity that we've had at Futurely for the last 6 to 8 weeks. We've been covering various topics which relate to obviously small businesses and of course, you know, our accounting partners as well. So I'm really excited to go through today's webinar, which is all about, I shouldn't have done that, I should have shared my screen, all about accessing funds for small businesses and really understanding the landscape that COVID has kind of put us all in. Now, it's certainly not new news, but things are changing quite rapidly across the board. So I thought it was a really good opportunity to be joined today by Prospa to really help educate and understand, you know, what processes, pitfalls, what small businesses should be aware of, and of course what services are out there which could hopefully help keep their businesses going, get them back to business, take away some of the stresses and anxieties that a lot of small businesses are facing at this time. So thank you all for joining me. Now, without further ado, in way of introduction, my name's Stuart Hunter. For those of you who don't know who I am, I guess I've been at Futurely for a number of years. You may have seen me at various events and of course, as I said, recent webinars. And if not, that's perfectly fine. I am a SEMA, so worked in practice a long time ago before I guess migrated to Australia. And since then, I guess I've done various roles within Futurely, and predominantly my passions are of course in helping small businesses and accountants be more efficient, and of course starts to have a I guess a better outlook on small businesses future, because I certainly see that from my accounts background and doing management accounts, it's an incredibly important piece of the puzzle, and it really isn't done enough. So I'm really hoping to spread that message. Now, to my right or below me, depending on where you are looking, I guess, at the video or on screen, is Joseph Lim from Prospa.
Thanks, Stu. Guys, for the audience, really excited to be today with Futurely. For those that don't know myself or Prospa, we've been operating in Australia for the last 8 years. Myself personally, I've been here for probably the last 3 years, and a big part of that time has been working both with partners, accountants, advisors, bookkeepers, etc. But really, our core focus is with the SME. We recognise that a lot of our accountants, advisors, bookkeeper partners are also SMEs themselves, but our purpose as a lender, as an alternative finance lender, is really to help all SMEs of all shapes and sizes. First time Prospa and Futurely have done something together. To be honest, that's probably on Stuart and I, being busy, maybe lazy, maybe distracted, because I think the opportunity between what we do as an alternate lender and a fintech and what Futurely do from a data and a processing perspective, I think there's a really nice relationship. So look, hopefully you all take something away today, and if you've got any questions, by all means, both Stuart, myself and our teams are here to assist.
100%, and thank you for joining me. And you are right, it's probably 50-50. You know, there's distractions, there's certainly huge synergies in what we do and what you do in market, for all of the people who have that level of exposure. But look, as I said, really excited, and thank you for joining me, Joseph, and of course Jessica, who is on the call sitting in the background. Thank you for helping coordinate it. You know, we really appreciate your efforts. Now, just as a little bit of housekeeping before I do hand over to Joseph to kind of get started. As I said, this is more of an educational webinar, but we absolutely do want engagement. So for those of you who have questions throughout the session, that's perfectly fine. If you can please just pop them into the chat box or into the QA box, and we will certainly pick them up. Now, if we don't pick them up immediately, please don't worry, we will absolutely answer those towards the end of the session. And if you do stick around, which we hope you do, there is a bit of a poll towards the end of the call, which is not necessarily a review on how well the webinar is and if you found it valuable, although we would appreciate that feedback. But it's more so around if you have any situations on your desk at the moment, which does require the need or at least some information around what options are available for certain people, then the poll will kind of give you a bit of a head start, as it were. So that's it for me. I guess if we move over now to, I guess, the first slide. Now, Joe, I don't know if you've got the ability to click on the slides. I did make you a presenter, but if it hasn't worked, I'll certainly kind of just tap away as we go.
Let's give it a crack, Stu. We'll quickly talk through the agenda, ladies and gents, and then we'll find out very quickly if Stuart's still the click in for the first couple. Look, again, thank you, everybody, ladies and gentlemen, for jumping on. There's really just 4 key points we wanted to walk through today, and I think to Stuart's point, there'll be an opportunity for everybody at the end to A, provide feedback, and B, ask some further questions. But when Stuart and I and Jess started kind of collaborating on how we can make this valuable for both small business owners and accountants and advisors, we've kind of looked at it from both sides of the fence, from a Prospa side and also from a Futurely side. So I'm probably really going to take the lead on the first part, which is probably the context of COVID-19 and how that's impacted small business. As I mentioned, Prospa have got 8 years worth of experience lending to small businesses. So we're seeing some trends, some alarming, some probably not, but more importantly, probably some also shoots of life, which I think is also worth sharing. We've got some of that information both from our own internal data system, but also some external resources that we work closely with. The second part, ladies and gents, is really probably where we see an opportunity for Futurely and Prospa to work closely together with our accountants, with our partners, and with our small business customers. And that's how you can leverage probably your own data, your own cash flow to help make decisions. Some of those might end up in lending, some of them might not, but it's really just presenting that as an option to you. And then I think the third part is we've all heard definitely about the Sme Guaranteed Scheme. I was probably fortunate enough to get some more data from our internal team that this morning we worked very closely with the government to help, I guess, not shape policy, but provide some insight as one of the largest SME lenders. So we've probably got some feedback that we can share on the current SME Guarantee Scheme, but also from a personal perspective, where we think that's going to move in the coming months moving forward. And then, as I said, open up to everybody for the next steps. Wonderful. So let's see if I can click through. Right, it's all onto you, Stu.
Okay, so I can give you remote control. So if you, okay, I probably won't do that because it wants me to go into my settings. So I will just flick across. Apologies about that. No okay, let's get started. The impact of COVID-19 on the economy, I guess.
Yeah. So look, this slide here, ladies and gents, top little bubbles that you see should be of no surprise to everybody on this call. We at Prospa certainly see the Australian economy as a small business economy. Circa 2.4 million, 97% of those are small businesses. Those are huge numbers. Now, these numbers are consistent across the world, but 97% in Australia is probably definitely at the higher side when you look at some of the other developed countries out there. For those that aren't aware, Australian small business economy represents 44% of our private workforce. And I think when you kind of read through the next couple of slides, the impact of JobKeeper and JobSeeker, that's why the government's doing it, given the amount of employment that's linked to small businesses. The little graph down the bottom is probably what we've always found interesting. And we look at this kind of annually. And it's the number of businesses with fewer than 20 employees, which is in our world a small business, kind of each year, and how much that's grown. Now, there's always been a steady increase, which is really positive. But I think the other thing that we all recognise and know, having worked with small businesses, is that there's always a pretty high drop-off. And everyone's heard the saying that if a small business, you've really got to get through the first 12 months. Right now with COVID, it's actually really getting through the first 6 months if you've just started. Think about a small business owner that started back in January of this year. They've really got to get through that first 6 months. And then I think the other trend that we're also hearing is those businesses that have been around, they've got over that first 1 year hurdle. That second year now is really important. So I think a lot of what Prospa, Futurely, and what the government's doing is really to ensure that as many small businesses as possible can kind of get through those humps, which are probably much larger than they were certainly 12 months ago. Next slide, please, Stu.
With the growing, just to throw a question at you there, Joseph, with the growing number of small businesses that are kind of operating with 20 employees or less, have you found that over the 8 years that you have been, I guess at Prospa, have been having to I guess, deal with lots, I guess, an increased volume of funding questions or applications as the market has grown. The need for that type of support has also grown.
Yeah, look, absolutely. We'll touch on this a little later, but the biggest thing that a small business needs is cash flow. And if you think about, again, a lot of the people on this call, probably small businesses themselves, we find what we've seen as probably a trend is that there are small businesses who are entrepreneurs, who are natural small business owners. They've got a great idea, and they've borrowed from the bank of mum and dad, or they've sold some of their assets because they really believe in their vision in their small business. Yep. A lot of other small businesses are professionals, so that have come from the professional sector usually. Again, if you think about accountants, advisors, a lot of them may have, not all, but a lot of them may have worked as a professional accountant or a CPA in a firm and have gone and started up their own practice, still with that yep. entrepreneurial spirit. Nevertheless, cash flow becomes a challenge after about that 6-month point, some cases 12 months. And a lot of it comes down to supply and demand of their services. Yeah. One thing that we always find, Stuart, whether it be a broker or a accountant or advisor, whether it be a cafe owner, whether it be a wholesaler, is that these people are experts in their business, but they might not be experts in actually running their business, the finance side of it. Now, this audience, a lot of accountants, advisors, probably more so well equipped than others. But it really comes down to, as an entrepreneur, as a small business owner, you're good at doing what you do best. And if you're a coffee shop owner, you're excellent at making coffee. You've got great customer service. But managing your supply chain and understanding your cash flow in and out is probably not your core strength. And it's where you really need to leverage, I guess, the right partnerships, which Correct. Is potentially a future of Prospa. Yeah. This here, ladies and gents, is probably the impact. And I don't know if anyone's kind of seen the map on the left of Australia. It's where the SMEs are across our great country. No surprise, obviously, New South Wales, the bigger state, Victoria, 600,000, SA, 150, WA, 224. So this is the small business landscape across the country. And I think Prospa, like Futurely, we support everybody nationally. One of our greatest strengths, and I will kind of toot my own horn here, is we do have people on in every state on the ground. And we feel that's really important when you're undertaking potentially a lending decision, or if you're a partner and you want to actually get some advice or talk to someone. On the right, however, is probably what we're seeing. And this data here is probably from, what are we now, just in August. So this is probably actually from July, so about a month ago. And this was surveying our internal businesses. So we've got about 27,000 small business customers that have used Prospa for a funding solution. But we're seeing a reduction in local demand. Now, a reduction in local demand, if you're again, I'll use the analogy of a coffee shop, is the amount of traffic that's coming through. A great example of that, irrespective of which state you might be in, your CBDs are generally much more quieter now than they have been at all time. Reduced international demand. So again, we think about online retailers is a good example of that. Reduced supply chain levels. So again, depending on the products or services that you are offering, getting those goods into the country, we've seen a huge impact. But then also the increase in supply costs. So at one end, you've got the supply level coming down, but the cost going up, which is not a great mix for anyone, to be honest. And then I think the final thing, it doesn't matter what industry you're into it, and again, I think you know we can talk to this as well, it's staff shortages. I think it's been great to hear, Futurely hiring, which is a great sign.
Yeah. I mean, lots. I know, particularly in the accounting space, staff shortage has been a problem for a number of years, and I can only imagine that in other industries outside of, I guess, what we know and love, while the issue is the same, and it's interesting to see, or at least hear, how the media are speculating about the attitude of different demographics of people because of things like JobKeeper, JobSeeker, and that change in attitude towards wanting to go and get a job. It's very interesting and very, I guess it's uncertain to know the truth, right? But of course, the numbers here, 37% staff shortages across most industries, that doesn't surprise me at all, given the circumstances.
Cool. So, ladies and gents, this is actually some internal data again from Prospa. So this is again 27,000 clients. I've just picked 4 industries. We've got a whole gamut of small business clients that we work with. But these were four that I thought, might be interesting to see in terms of the effect from a revenue perspective. So, Prospa, we lend based upon the cash flow of a business. Irrespective, where you're based, we look at your cash flow. That's part of a real critical part in terms of whether we're going to say yes or no to lend to you. So when we're looking at observed revenue trends, we're looking at essentially monthly turnover of businesses in these kind of key industries. Couple of call outs. I don't need to talk through the graphs specifically, but what you would say is that after that first kind of dip of COVID, circa around March, you saw a decline almost everywhere, except building and trade, which is maintained consistently and flat throughout. Now, our view on this is it's not JobKeeper or job seeker. It's just as an industry, which is largely project based, and you've got a nice mix of both commercial and residential. They haven't seen a drop in terms of revenue. Now, this applies to plumbers, sparkies, your carpenters, but also applies to your small business builders as well. Not your big developers. We don't lend to your multiplexes and Meritons of the world. So again, this is all on small businesses that work in these areas. Hairdressers and gyms, I think, follow a very similar trend that we're probably seeing again in hospitality. That's probably a very similar trend that we're seeing there. So a big drop kind of March to April and then kind of picking back up. And then I think probably the most pleasing thing to see was manufacturing. And that kind of rose pretty steeply off the back of the JobKeeper and the job seeker subsidies. So that's where there's probably a larger volume of staff that were able to leverage those government schemes.
Yeah.
I think the question, or the $20 million question, sorry, Stuart, is what's happening now? So we absolutely probably have seen some other dips going back, but probably not to the same extent that we saw back in March.
No, and it's obviously, I was speaking to, I had a very, very brief chat with one of the ladies of the audience today, Lynn, and she was saying she's quite thankful that she's in country Victoria, but of course, if you applied these stats and went state to state, I'm sure, in terms of the upturn, I would imagine they're starting to see, trends go backwards again, which is obviously incredibly sad. Which obviously means there's 600,000 small businesses potentially who sit in that bucket of kind of probably needing some form of support at some stage.
Absolutely. Look, again, this data is based upon what Prospa have across our 27,000 customers nationally. But you're absolutely right. And Lynn's point, if you focus on a specific area, geographically, postcode or state, you're going to observe slightly different trends.
Yeah.
This here, ladies and gents, again, probably broad, but it's from Equifax. So when Prospa kind of went to go through its underwriting process, when we're going to lend money, Equifax is obviously one of the people that we look to look at your corporate credit file. This was kind of interesting because it looked at the types of products that Equifax were seeing requests for. And this isn't just from Prospa; this is across the market. So for those of you on the call, you may not be aware, but Equifax is probably Australia's largest bureau. There's Equifax and Ilium, the two big credit bureaus that exist. And everybody, whether you're a bank, whether you're an alternate lender like Prospa, whether you're a credit card company, everybody uses either an Equifax or an Ilium to kind of get your credit worthiness before they're going to make a lending decision. So this graph here, ladies and gents, it kind of talked to, again, that lockdown period. So if you think about, March, April, May, similar to what we observed with the Prospa trends, but Equifax were kind of sharing what they were seeing as a credit inquiry. And credit inquiry based upon products. So asset finance products, ladies and gentlemen, is probably more generally your cars. So it could be tractors if you're in agriculture, but largely asset finance is usually a car or a commercial van or something along those lines. Trade credit, as we're probably aware, you're going to see that affecting your wholesalers. So your trade credit terms, and where Prospa would generally fit, and it's a generalisation, is in that business loans. Whether it be secured or unsecured, whether it be a line of credit. And that was probably the most common approach. And I think from our side, when we looked at the two together, it seemed to be that the access to capital seemed to really dry up, to be honest, once COVID hit and a lot of lenders kind of tightened up the purse string, so to speak. Hence, you saw the increase in the requirement for largely a business loan. So interesting.
You may not know the answer to this as of yet, Joe, but has there been much change in these numbers from end of June through now towards the end of August in that 2-month spike? Have they kind of remained at the same level, or do you not yet have access to that information?
Great question. Don't have access to the raw data.
Fair enough. Yeah.
We do catch up with our friends at Equifax probably on a monthly basis. I think the only common trend that we're seeing is both asset finance and trade credit have both picked up.
Yeah.
And I think we've just finished end of financial year, so government, the ATO, small business kind of guarantee. We saw a lot of small businesses can go and acquire a van or a bit of equipment that they required and essentially write off $25,000.
Yeah.
So asset finance, I think we've seen a bit of a spike coming after end of financial year, June and July. Trade credit's probably an interesting one because a lot of the stimulus that comes out, it depends on what's categorized as trade credit. Some people have extended terms on their credit cards, so to speak. Now, in Equifax's mind, that probably doesn't fall into that bucket, but we're definitely seeing the government jump in and trying to ensure that those that are wholesaling, importing goods from overseas, that they're given some pretty favourable terms from the larger institutions.
Yeah, I mean, it makes sense at this point in time. So look, some really, really valuable insights about, I guess, the landscape and the way it's changed, and of course the increasing requirement or necessity to at least be looking ahead to be able to see, you know, what type of support that your clients or even your own business potentially needs at the moment. And as you said, there's different products depending on the different you know, kind of lenders you approach. Now, when it comes to the application process from Prospa, then you have alluded to it already in terms of, you know, you guys lend based on cash flow. Can you just share a little bit of information about that process, if I'm not jumping the gun too much, of course, before I kind of I guess go through exactly where Futurely potentially can help with this process?
Sure, no problem at all. So I think it probably ties in nicely. It was just a chat question that came through from, I think it was Dave. So I might be able to tie the two together.
Oh, awesome. There you go. Yeah.
Yeah, Dave's question was, did the Prospa inquiry rate, so you know, applying for finance, go up May through August? Yes, it definitely went up through August. Was it up year on year? No, it was probably down year on year. So we're a publicly listed company. You may have seen our results that we shared to the market. So year on year, down, but we definitely saw it move up May through August, which I think is a positive, and again, some of the green shoots that we can hopefully share with the audience later today.
Yeah.
Stuart, in regards to your question about cash flow, before we see where there's I think a pretty logical fit with Futurely and Prospa. The Prospa application process, ladies and gentlemen, is relatively straightforward. We hear this a fair bit, but we're a fintech, and the way I always like to frame it up for both small business owners and partners, advisors, accountants, brokers, etc., is that the tech helps us make a decision really quick, but ultimately we're still a finance company. So we get our funds from wholesale markets. We have our funds, there's a little bit still of private equity, but as I mentioned, we're listed now, so we've got a number of institutional investors as well, and then we lend that money out. That's the fin. The tech part of what we do is actually we make it super easy, really quick, and very transparent. So to Stuart's question, one of the key criteria that we look for when we're going to make a decision whether to lend money via an application is what the cash flow looks like. So we're often looking at bank statements, and we're also looking to get insights from partners about the cash flow of a business over a period of time. And if we're seeing good cash flow, and I can openly say our minimum kind of monthly cash flow we look for is about $6,000 a month, then there's that's kind of a base qualification, if you like, for us to be able to lend. With COVID obviously popping up, the challenge that we're always asking our clients for is it might not be 6,000 this month, it might be at 5,000, but if we've seen signs of it was 6,000 prior to COVID and are on the way to getting back there, that's the advantage I think you have of working with a company like Prospa. We try to say yes more than we try to say no. It's a nice way to look at it.
Yeah, awesome, and I'm sure that's going to be news to people's ears as well. Now, I do just want to segue into the Futurely platform. For those of you who maybe haven't necessarily looked into us before, have seen us, you know, around the marketplaces, you know, through the Xero or Mob or QuickBooks landscape, maybe been at a roadshow but never really looked into it. We're a forecasting tool at heart. That's the reason we were, you know, launched to market 6-7 years ago. Our founder ran a pub, and she was forecasting herself in spreadsheets, you know, the age-old tool that we all know and love, and I guess sometimes it's hard to move away from. But of course, she was then being really reactive. It was also incredibly time consuming and probably quite laborious for someone who's not of a financial background. So she set about herself to build a tool which would really help automate and give a user greater control and flexibility over the projections that they had on their own business, and to be able to create various models, because of course having one version of the future, COVID is probably a very good example of that, it doesn't always work out as you expect to happen. So being able to take a base budget or forecast or projection, whatever word you want to kind of label it, create another version, play around with some of the assumptions, be a bit more aggressive, be a bit more conservative, and use that varied scenarios or different outlooks of your business to then make certain decisions around whether you should spend money or not, so on and so forth. Now, over time, we've evolved to be a lot more, I guess, accounting or accountant friendly, because being able to create numbers and visualize numbers is fantastic, but then when it comes to application processes, such as one with Prospa, you're going to need to take that data offline. So over the years, we did develop to include kind of management reporting and a lot more I guess features which accountants have now learnt to grow and love and use the product. Now, I know Futurely has been used for, I would say, thousands of hundreds, if not thousands, of forecasts or requirements for lending in the past. So I did want to just include a screenshot in here for you all to have a little bit of a look at the forecast section of the product without me going too much into a kind of a technical product demo. Now, this is probably a bad example, so I have to hold my hands up here because this shows cash flow growing in the particular chart. So I guess it's counterintuitive in relation to what we're talking about. However, the mechanics of what the product will be able to do will give you that full three-way visibility. And again, if you compare what's available in a tool such as Xero, for example, where you can forecast the profit and loss side of a business, you can't forecast the balance sheet, and it doesn't yet give you I guess a detailed and a longer tail cash flow. Of course, balance sheet movements in a business are the ones which are often most overlooked by small businesses. They're often running their business from their bank account balance. They don't always remember or have great understanding and knowledge of things like delayed payments to the governing bodies, the ATOs, the super funds, movements in assets and liabilities. All of those things ultimately still move in and out of the bank account. And if they're just using their bank balance plus their P&L to forecast for their business, then they're kind of doing themselves a disservice. Plugging that data into Futurely from your Xeros, your MyObs, and your QuickBooks will then allow you to work with your clients and get a way better understanding of the mechanics of the business across all three different perspectives. Now, the next slide does show you here a loan calculator. So to the left-hand side, you can see here we've got the cash flow forecast, and the graph on the chart is the visualization of that particular set of data and what the numbers do present. Now, if you were to use Futurely and you were to see a dip in cash flow, the cash flow was looking like it was going to hit zero at some stage in the future. In my example here, I think I'm saying kind of August time, which is kind of today. So if you could see that there was a cash flow gap, or the business was starting to go negative, revenue is dried up because of COVID, there's still quite a big set of expenses and cost of sales to keep the business going, then using our loan and amortization wizard, you could sit there either with your advisor if you're a small business owner, or if you are an accountant and you want to have this conversation with your client, you could actually sit there and play around with some numbers in terms of how much they might be able to lend, what the requirements are, or the terms and conditions around the debt. Now, I know we're going to come to this in a moment, Joe, the government-backed scheme where you have a mandatory 6-month repayment window. So taking debt today doesn't mean you need to start making repayments for another 6 months. Stuff like that you were able to sit there and model with your clients. Do you take 100 grand? Do you try and take 150? Do you take 50? And it will really help speed up your decision-making process before you actually then go and start the application with somebody like Prospa, because you've already done your homework. You know exactly when the cash flow deficit or the cash flow negative trend is likely to come to fruition, and you can be way more prepared in advance in terms of helping your client solve that problem for themselves before it becomes a problem. And really that's where the real-time data flow, the connection with the cloud data, and then having the tools to be able to model certain scenarios and certain versions of the future is really going to help you guys make the best decisions at the right time for the clients that you service. Or if you are a business yourself, making sure that you are making the right decisions, and the volume or the values of any support packages that you are looking to capture, that they're the right ones for you, and it's not too much or too little, depending on your circumstance.
I think, Stuart, that you really hit the nail on the head. Again, ladies and gents, 27,000 odd clients. A lot of the clients that have worked with Prospa and continue to work with us, a lot of them are, not all, but a lot of them are referred via either their broker or their accountant. Not all, but a lot are. And inevitably, what we see is that when we get to the stage where we're offering documentation, usually it happens within about 24 hours. It happens pretty quick. $20,000, $30,000, $40,000, $50,000, $100,000 sometimes. Often the decision that they're working through is, okay, great, I know I need that capital, but geez, okay, it happened so quick, what am I going to do with it? The other thing that we also see, and I think everyone's probably in this boat, Stuart, is when people come to us and request finance, they probably need it last week. So I don't know, again, if you're a small business owner, hopefully you're not in your head. And if you're an accountant or advisor, I almost guarantee you're probably not in your head when you're working with small business clients. I think the value of a tool like this, you can forecast where there's going to be a cash flow gap. I think you've solved half the problem, to be perfectly honest, because it's not just Prospa, there's other players in the market. Knowing the gap that's coming up is probably the first thing. Doing something about it, you'll at least have options. And just the final point, I know we're going to get into the differences in kind of products and services, COVID or the Sme Guaranteed Scheme rather, but it's always better. Doesn't matter what finance you're going to apply for, if you do require access to capital, to do so when you're in a stronger position. So knowing that you're going to have a dip in August or right now in October is not a bad thing. The government guarantee scheme enables businesses, they don't have to be tracking as they were 6 months ago, but it's better to think about it, or at least potentially get yourself prepared now for where you potentially foresee some gaps in the future. As long as you've got a plan to work through it, that's I think that's the best thing to keep in your kit bag, so to speak.
Yeah, 100%. And I think I would hope that the greater lesson learned, if it was the only lesson learned from a small business landscape, as you said, it's 97% of the Australian economy. If we just look at Australia, the lesson learned in not having visibility on where you're going, even if it's only 3 months down the line, six to 12 weeks, I think the impact that the pandemic has had, especially on certain businesses who didn't know their cash flow runway, didn't know, they were kind of operating week to week. I do hope that the lessons learned there will help. Tools like this and other tools, we're not the only one in the market, of course. I'm always going to be biased towards Future because I know it and I know it works, but there's plenty of tools out there which will help a small business or an accountant or both plan, look forwards, actually have a bit of an understanding. And as you said, the more proactive and the more visibility you have on potential pitfalls, then, as you said, if you're in a stronger position at that point in time when you realize it, you can obviously do a lot more with it, as opposed to being reactive when you're already in a weakened position and you're kind of compromised from there on out. So I really do hope that gives the audience who's never seen Future before a little bit of scope in terms of what it is capable of doing. Now, for those of you who are currently going through a funding exercise with a client and you're having to build it out yourself manually, I can only encourage you, please do take a look, because it certainly will not only save you time, but also give you a lot more opportunity to change and play around with certain assumptions without having to fiddle around with formulas and all those beautiful things that Excel typically brings to the table. So if we deep dive then into the funding side for small business, Joe, this is certainly your I guess area of expertise.
Ladies and gents, I know Stuart talked before about some of the associations. So I was fortunate, we'll go with fortunate enough to attend an IPA, Institute of Public Accountants event probably this time last year. God, what a different environment it was, right? Face to face at a national congress. And Bruce Bilson was actually presenting. We work with CPA, IPA, a number of the associations, but this one was really good because his quote, and I went up after him and said, Bruce, look, do you mind if we use it and present it to a couple of our accounting partners? And he obviously gave us the all clear. But to us, this is a real kind of key message that we like sharing, which is finance is the oxygen of enterprise. And I think if you ask our CEOs, Bo Bertoli, Greg Marshall, who are both small business owners themselves, I think they'd say finance is the oxygen of enterprises, big and small. That's what they've seen. That's how the kind of business grew. So Liked it as a nice little segue in terms of what we do. We're going to kind of dive into a bit more of the nuts and bolts, and I think what's potentially valuable, hopefully for this audience, is the use cases that we are seeing for SMEs. I think thinking back to what you just presented, Stuart, about not forecasting, but just at least having a view into the future is probably the number one step. By the time an SME often comes to us, what you see there, ladies and gents, on the slide on the left is ultimately what they're looking to do. So they've already uncovered the problem, and they're looking for funds to help solve it. And the number one use of funds, we interviewed all of our customers, is cash flow. Now that's because they're using cash flow to run their business. There's a number of uses for it. It's not like buying a house, right? When you go to the bank, you want to buy a house, you get a valuation. It's not like that. It's not like getting a loan for a car where you're required to buy that one particular asset. You don't borrow $50,000 to buy a $30,000 car. You don't borrow $1 million to buy a $500,000 house unless you've got a great deposit. What we see in business owners is they need $20, $30, $40, $50, $100, $300,000, and a lot of it's to maintain cash flow. And that can come down to wages. It can come down to stock. It can come down to upgrading equipment. It can come down to marketing. It can come down to actually pursue other opportunities, which is usually a combination of all of those together. Obviously, of no surprise, ladies and gentlemen, we're definitely seeing an increase in funding for those that want to diversify their business. So again, lockdowns, irrespective of what state you're in. If we've got some of our Victorian friends on the WebEx today, we do feel sorry for you. We've got clients. We've also got our people down in Victoria as well. But for those small business owners down there, they're really diversifying. Yeah, we've got friends and colleagues in New Zealand as well. So Auckland's been shut down. However, as opposed to the first lockdown in New Zealand, Auckland's still able to, or cafes and restaurants are still able to do home delivery, which they weren't able to do the first time around. So we're definitely seeing the use of funds for small business owners in some of those two areas to diversify their offering. And whether that be dollars for casual wages, whether it be they never had a takeout service before and they're just putting some systems in place. The great thing is when you're looking to change your business right now and put systems in place, we're definitely seeing that a lot of vendors are quite supportive. What I mean by that is, yes, as a financier, we provide obviously, extended terms, etc., for our existing customers. The banks are doing deferrals as well, but we're also seeing some examples of that with other key vendors. So if you need a new software system or if you need a new POS system, etc., we're actually seeing a lot of those vendors also provide payment flexibility. So what you've almost got is an ecosystem where everybody understands and the extended payment terms to acquire the goods or services you need to keep your business going. A lot of it, not all of it, but a lot of it is definitely coming from the right intent and having the right impact. I think the other one, just to kind of call out on this page, is it's really that last one, working capital to draw down from a reserve they expected cash flow issues down the track. This, to me, Stuart, speaks to what you just showed in your previous previous slide.
Yeah, 100%.
Yeah, so those guys and girls, this is what we're seeing. This is what SMEs are asking us for, and these are the reasons why those requests have probably been highlighted even more as a result of COVID.
Do you find, again, based on your 27,000 customers, do you find that majority of the requests, you said you did briefly mention that you get a lot of referrals for your accounting partners from small businesses that come to you directly. In terms of the application success, is there quite a gap between an application which has been done in collaboration with an advisor versus a small business doing it directly? Do the stats differ somewhat in those circumstances?
It's a really good question, Stuart. They do. If you wanted to kind of Prospa's intermediary channel, partner channel, which includes accountants, includes brokers, advisors. It also includes some of the accounting platforms, so Xero and Reckon, Futurely as a partner of ours. We also have some marketplace partners of ours, and then we also have a direct team as well. So a small business owner or a partner can come to Prospa and essentially create an application completely online without speaking to anyone. It's their choice. Alternatively, they can speak to either a BDM team or they can speak to the loan application team. Your question around, do you get a better result if you've got an accountant or advisor, basically a personal advisor helping the business through? Absolutely, yes. 100% of the time. I won't break down our entire funnel, but overall, I can put hand on heart and say the conversion that you get from a small business owner who is inquiring for funds from step one through to, yes, I'm going to sign and I'm happy experience is a higher conversion when there's an intermediated relationship referring it. And that's kind of how our business model started. We are, however, seeing a trend where a lot more of SMEs are going online. And part of that might be they can't go and see their accountant or broker, which has normally been a one-on-one type relationship where they've gone and visited them in their office. Part of them is where the accountant or advisor might be saying, look, work onto your Xero platform, which feeds information into Future, and I can do this online for you. So we are absolutely seeing that as a trend. Probably early days to work out whether it's eating into the conversions of some of the other intermediated business.
Yeah, I just think it's an interesting perspective because I did a webinar with an accountant and a bookkeeper last month. They were New Zealand based, and I know in New Zealand there's only, you have to register to become a broker in order to be able to access or apply for certain funds. And I know that certain small businesses don't necessarily know these services are available or their accountants are able to support in these kind of situations, other than the actual preparation of the cash flow, and then that's kind of it, So I think, for the accountants on the call today, if you're able to support your small businesses through that process, or if you are a small business and you this is the type of service or product that you feel like you need, then absolutely please go, and I encourage you to go and speak to your accountants, because, as you said, Joe, you guys have partnerships with accountants, with small businesses, with vendors like ours. And the community absolutely today is probably stronger in the community aspect than it probably has ever been, because we're all in the same situation together, and it's in everybody's best interest to support one another through this, hopefully to kind of brighter days. So please, if you are sitting there and you are, you do need finances, or you do need support, or you just want to start the conversation and have a look at, when is my business, does it look like it's going to run into trouble? Please do go ask the right questions of those trusted advisors that you have.
So, mate, that's a great call out, Stuart. Again, 7-8 years ago when we started, brokers was probably mortgage brokers was the first place that we went to. And we learned very quickly that a mortgage broker would generally meet with their clients, I don't know, every 2 or 3 years. Maybe 4 years, because it's when they were going to refinance their mortgage. Yeah. And one of the greatest, I think, probably bits of advice we shared with mortgage brokers, probably again going back 5-6 years ago, was your clients that you're seeing every 3 or 4 years, you should be seeing them 3 or 4 times a year, because if they've got an ABN and they're a business and they've actually got a business, don't think of them just as a consumer. If they've actually got a business, they probably require capital 3 or 4 times a year. Yeah. And so that kind of opened up a huge, new world for that market to talk to. Advisors and accountants, you guys are actually probably in a better situation. You're seeing the business every single month, and what Stuart, just what you just shared, mate, in terms of the cash flow, you're seeing those gaps coming through. Some of them don't like to refer; they don't feel it's within their remit, and that's absolutely fine. There's brokers, there's associations, there's other online platforms to do so. I think the key message here is, however you'd like to, I think between Futurely, Prospa, and a lot of others in the market, there are options for you to assist your small business owner or to assist yourselves.
Totally.
On that, I haven't, this was something that Stuart and I were talking about before, ladies and gents, but we're trying to just find some examples. They're all real life examples, by the way. I haven't discluded Victoria. We actually had like 3 or 4 slides, but we just kind of cut it down to one. And my view on this is because I've got 3 very distinct different times in business, which is again another kind of key element that Prospa looks for if we're going to lend. So you can see there's a business that's been around for 7 years, another one for 12 years, another one's only been around for 15 months. So that was really what I wanted to show. And then I think the other part was the loan amounts. They vary, 100,000, 11,000, and 50,000. I won't read through the emerging industry theme or the use of funds. Hopefully, obviously, you guys can all do that. What I would kind of call out is kind of what we see as averages. So, the most common, or I call it the average deal size, and whether that be a loan or a line of credit, is probably around $40,000 is what we see as regularity. Time in business, so how long has a typical Prospa client been trading for when they first come to Prospa? It's usually around 2 years, but our minimum requirement is 12 months. And then I think, hopefully, from what you can see there from the loan amounts, we lend anywhere from $5,000 up to $300,000. And really, the emerging industry theme is what we spend most of our time. So every single person that kind of applies through Prospa, online, through an accountant, an advisor, etc., they'll be speaking to a loan consultant to kind of finish the application, and then that decision usually happens in about 24 hours. But it's really those emerging industry themes is where we're spending most of our time. We want to understand how your business is operating. We want to understand what you're looking to do with the cash flow. Again, our remit is to say yes more than no. And at the very top of the screen there, ladies and gentlemen, you can see probably 3 distinct industry categories. Professional services and agency. I think, Stuart, you've got an example of a couple of agency clients you work with, hair and beauty and wholesale. So there's a broad spectrum that we want to work with the small business economy.
Yeah, totally. And I think it's interesting when you look at the numbers, in terms of life cycle time in business, you would assume, on paper, a business of 12 years kind of has their processes and their admin down pat, but also looking at opportunities, a quick amount of capital for them to bulk stock, to stock up, because they know that, in that example, the supply chains probably slow down a bit. So if they can buy more up front, there's less of a reliance to have to wait for out of stock goods or whatever it is that they purchase. Similarly, a new business taking advantage of the fact that they want to set up a new product line, they need some cash flow, they're a younger business. But I think there is no I guess one size fits all in these circumstances. And I think in order to expose or create these opportunities, again, got to be having those conversations with the business
Correct.
owner or your accountant, depending on what side of the fence you sit on, because you may not know that these opportunities exist. And if you can, of course, if it is an opportunity for you to make a change for your business for the better, then of course, why not explore those options? But yeah, the conversation itself certainly is the correct starting point.
And yeah,
look,
it's a risk-based model.
100%. Now, as I said before, I kind of briefly touched on some examples of where Futurely has helped with funding exercises. I have so many I can kind of share. I don't have specific numbers to kind of expose, but I do know that in construction, as you said, taking advantage of some of the capital, the government schemes where you can write off new asset purchases before the 30 June. So we were seeing lots of forecasts being generated at Futurely in order to look at lending capacity so that they could take advantage of those opportunities that the government were kind of bringing to fruition. I think my lights have just turned off because I haven't moved for half an hour, 45 minutes. So yeah, look, in terms of kind of what you guys are looking for as part of the application process, do you kind of want to talk through the audience just through this?
Sure.
Awesome.
No problem at all. So, ladies and gents, kind of we talk through the how, which is again, if you're an advisor or an accountant or a small business owner, you can come to Prospa directly, or you can work through your partner, or you can work through. I think there's a link that we're going to provide at the end of the webinar if you're interested to learn more and or apply. But essentially, our minimum requirement, ladies and gentlemen, is what you see on the left. So accepted or preferred industry, I feel very comfortable with this audience. Everybody fits into that category. One probably example that we don't do any work with is actually those in the smash repair space. That's probably an industry we don't touch, we don't go through. Firearms, etc. So a lot of it's at a brand and a risk level, but majority of industries we will lend to. Minimum 6K monthly average revenue. So we lend on cash flow. So we'll look at 12 months worth of bank statement data to identify what your average minimum monthly cash flow looks like. And again, we're absolutely aware of the impact of COVID. We have to be, because we lend to small businesses. So 6K is what we look for as a minimum monthly average, but we absolutely appreciate if you look back to most businesses over the last 3 months, it's probably not going to be showing that. As long as we've got some guidance that perhaps before that it was at that 6K level as a minimum, and we see a road to recovery, then there's absolutely an option there. If there is an ATO debt, then we look for an arrangement. This is actually something that we saw a lot of pre-COVID. So a lot of really good quality small businesses that actually probably wouldn't have normally come to a Prospa and alternative lender. They usually have a big facility in place with a bank, but because they had a $50,000 ATO debt, the bank wouldn't touch them. And again, accountants and advisors, or even SMEs on the call today, you'll absolutely know that. So it's often a use where we just pay out the ATO debt, let them get a big facility in place. The post-COVID recovery plan, I think I just talked to, and our minimum time trade-in is 1 year. Ivan, I think your question is why do we don't? Risk policy. So we're a risk-based business. So we've probably lent about $1.2 billion into the Australian economy over the last 8 years. Smash repairers is an industry that, from a risk perspective, we're not comfortable with. Probably, if you ask me my personal view, I think we see probably some examples of, for lack of a better word, a lot of cash in hand in some cases. And we also see potentially some views of, in some cases, in some areas, some fraudulent behaviour. There's probably a number of characteristics which we've kind of learned from. We also don't do too much in the taxi or the Uber industry, which is kind of more that gig economy. But it is something I think that we are looking into. So it's more of a policy perspective, Ivan. From the product perspective, ladies and gentlemen, kind of our small business loan, our line of credit, that's kind of what clients will be applying for, what you see up the top there. And then it's the SME guaranteed products. So again, I think, Stuart, you alluded to this earlier. The biggest difference here with the SME guaranteed products, and I'm not sure how familiar people on this call are with them, is that the government gave out, again, a guarantee to a number of lenders. And that guarantee, it's often a bit of a misconception in the market. The guarantee is actually not for the small business owner who's actually taking the funds. The guarantee is for the lender, not just Prospa in this case, but all the big banks, a lot of the tier 2 banks as well. And essentially what the guarantee does, it guarantees 50% of the losses. So if Prospa were to lend $100,000 to a small business owner, and as an example, midway through that term, that small business owner unfortunately fell over and there's a $50,000 outstanding debt to be paid, the government would guarantee $25,000 of it. So that's just for context, whether not just Prospa, that's all lenders who have access to the guarantee. That's how it works from a lender perspective. We as a business, as with all the other banks and all the other tier 2 lenders who have access to the government guaranteed products, the other conditions of it is that there is a 6-month no repayment window. So if you take a government guaranteed product for a loan for $50,000 or a line for $50,000, there is no repayments for 6 months, but then interest will accrue at the back end of your term. And that's again consistent with all the other lenders out there. I think the question this audience might be asking is, okay, so what's the difference between going to say a Prospa or CBA? Why would I if it's the same thing? It really comes down to 2 things. How fast do you need access to the capital? Do you need it in 4 weeks or 14 weeks time, or do you need it in 4 days? That's probably the one call out. And the second thing is the customer, I'll call it the customer experience to actually get access to the funds. So is the process actually easy? And hopefully for what I'm showing you here on the screen, it is. If anyone here has ever done a mortgage, if you're lucky enough or unlucky enough to have a mortgage, depending on when you bought, you'll know that it is endless realms of paperwork and questions. What we're sharing with you here is literally what you need to access to these kind of funds. And then there's essentially a phone call with an agent here in Sydney.
Yeah. In relation to, again, just this is my lack of knowledge in the different service lines and products, the different service lines of products, so the SME guarantee versus the small business loan. I may be asking a pretty stupid question here, but obviously the small business loan, there is no guarantee, from your perspective, from the lender's perspective. You guys are of course analysing and taking the risk on the customer. The SME guarantee product then does have some form of support, I guess, for you guys if the actual the particular business, correct, as you say.
Yeah, I think okay. Yeah, Lara actually just put that question up there. Lara, so a really good question. There's a director's guarantee required. The loan or the facilities are largely unsecured. We're not taking your property, we're not taking an asset as security. So we do ask for a director's guarantee.
Right. Thank you for clarifying.
No problem.
So look, I think some really incredible. Sorry to interrupt. I should say some really great information. I certainly know. I mean, I know a family member who's been going through this process for his own business, or at least looking at it. Of course, he's been using shamelessly using Futurely with zero file to kind of look at what when and what for, and what would he use the money for in this circumstance. But I think everything you've shared today about the changing landscapes, the processes, the things that we really want to promote off the back of this webinar is, of course, the communication aspect between a business and an accountant, or vice versa. To be able to be more proactive, to have those conversations, to be looking in the direction of the future with as many clients as possible, to try and capture, or to prevent the, as you said, the reactive nature of then saying, okay, we need funds now because we've run out of money. If you can see it 2, 3, 4, 5, 6, 7 weeks in advance, you're just in a way more comfortable and favourable position to be able to do something about it.
Stuart, couldn't have said it better myself. Look, this slide, I didn't write this. This was written from a marketing's perspective. You can probably tell, ladies and gents, by the language used. I'm ashamedly happy to kind of own it and present it. But that last one, the survival mode to thrive mode, whilst I think there's a really nice kind of catchphrase there, I think in reality, it's exactly as Stuart's just kind of alluded to. If you've got the ability to kind of forecast where you're seeing a gap coming up, there's an ability here to solve that gap. And whilst that might not help you thrive in the next week or the next month, if it keeps a really good business running, the value for not just the business, the accountant, the advisor, I think it's the actual economy. This is what we all want to do. And again, going back to those examples I was referring to in New Zealand, where you're seeing some really positive signs where vendors are providing terms and they don't have to. Yeah, the banks and all the financiers, we do, and we will, because it's the right thing to do. But also, you're seeing vendors, you're seeing other kind of services also provide those terms, because we realize the importance of small businesses to literally the economy from both a GDP and a jobs perspective. It's absolutely critical. I said I'd touch on kind of what I think round 2 would look like, whilst we haven't got it all locked in yet. From a product perspective, we do envisage that Prospa, as well as the other lenders that have been part of the government guarantee policy, that will extend obviously until probably June next year. What that looks like is yet to be confirmed, but I dare say a lot of the similarities in terms of providing flexibility in payments will be probably a real key part of it. I think the other big part of it is providing flexibility for the SME. And so just one thing that we've learned, we've had some SMEs that will take the government guarantee, but they didn't want to wait 6 months for payments. And that's probably because they're using the Futurely system. They said, look, we only want 3 months worth of deferred payments. Government policy doesn't allow Prospa or any other lender to do that.
Interesting.
So you were given an option. You can have a normal loan or you can have a government guaranteed loan. Government guaranteed gives you 6 months. So I think, ladies and gents, what we'll see post September 30 is that flexibility, which we all really want, which might be, right, I'd like to loan for $30,000, $40,000, $50,000, and I really need 3 weeks as an example, and we'll have the ability, and every lender should have the ability to do so. That's what I envisage that will be occurring. I also think, what we see in Victoria and certainly New Zealand, the 2 markets that we're watching very closely, will also help shape the rest of what we do. Nationally.
Yeah, it's interesting. I wasn't aware that there was inflexibility around that, but as you said, post September, when the legislation, I believe they need to update it, because the original announcement was to April to September. Hopefully that does mean then that for the following months and beyond, there's greater flexibility.
Yeah, and that's an advantage with an alternate finance provider, right? A bank has probably got some more structured policies that they have to stick to. We probably want that flexibility, which I think helps.
Yeah, and I think one of the key points you mentioned there as well is actually how quickly do you need the money should determine the decision of what institution you ultimately go and look to seek support from. Because as you said, banks as big and as great and as long as they've been around, they've also their processes are still pretty mundane and quite time consuming in certain areas. Versus, as you said, products like yourself, where there's a lot more speed and efficiencies and easier accessibility. Wonderful. Well, look, I think given that we are 2 minutes to the end, I really do want to open the floor out to any questions. Thank you, everybody who's kind of popped questions in throughout. I hope that has made sense. Now, we have created I guess a landing page for everybody who is interested, as Joe said, whether you're a small business owner looking to get some more information yourself, or actually if you're an accountant who has clients who need funding and you're in the process of evaluating where to go. If you do visit prospa.com/Futurely, and you can register yourself on an account, and at least that way you can at least start that process and slowly chip away at any of those requirements that you have. And if you are an SME yourself, please do jump on prospa.com/futurely. And of course, the amazing team at Prospa will be able to kind of guide you through that process. So if you do have any questions, please do fire them through. I am just going to launch a poll now off the back of today's call. Now, the poll really is if you are sat on this call and everything we spoke about has resonated with you in one way or another, and you would like to actually just speak to us or to Prospa directly to, I guess, discuss some potential next steps or some immediate needs that you have, then please do let us know. It is the easiest way for us to be able to contact you in the most time efficient way possible. Of course, we can arrange a call at a date or a time that's convenient. But for those of you on the call, if you wouldn't mind, please do fill in your answers. And if you do have any questions for myself or Joe, then please do pop them through into the chat box now. And just while we wait for any questions to come in, Joe, I'd just like to say thank you on behalf of the audience and myself. Incredibly insightful information that you shared today.
Thanks, Stuart. Well, absolute pleasure, mate. As I said, apologies it took so long, and again for the audience, if you do find it valuable, I think both Stuart and I, Prospa and Futurely, are definitely invested in making sure there's some more education that keeps kind of coming through. So keen to get any feedback.
100%. And again, for any of you who, if you're a business owner and you have friends who run businesses and they're struggling at the moment, and you're hearing their concerns over coffees or over Skype or on the phone, and you feel like they would actually benefit from listening to the conversation and maybe speaking to one or both of us, then after the call, we will be shooting out we will be sending out the recording. So if you would like to forward that across, by all means, please do. Similarly, if you would like to just point them in our direction, then again, we'd obviously be more than happy to chat. And for the practitioners on the call today, if there's other partners or other portfolio managers within the business who, again, you feel would probably benefit from lending an ear, by all means, please do forward across the recording or any of the contact information. And of course, we'll endeavour to get back to those if they do have any questions as well.
Sounds good.
So look, we're nearly at the end of the poll. There's a couple of people who have dropped off, so potentially they have dropped out. So I may just end the poll there. But thank you everybody for your participation. For those of you who have said that you are interested and would like some more information, we will of course make sure that we get back to you in due course. But as I said, thank you very much for your time. I hope you all have a fantastic end to the day. Joseph, again, really appreciate your time and your sharing those insights and experience. Much appreciated.
Pleasure, Stuart, and thank you everybody for spending some time with us this afternoon. Really good.
Awesome. Thank you, guys. Enjoy. Take care.
See you. Bye.
Bye.